Hey everyone, it is Friday. It is about 12:30. We have about an hour left of trading here in the day, so I wanted to get the video out to you real quick just to show you how the markets have traded and what's been going on. So here on this screen here, we have the daily chart of corn over here in this box. We've got the 240-minute chart, the 60-minute chart, then over here is new crop soybeans. So I'm just going to kind of walk through here on the daily chart and show you exactly what it is that we're looking at. Let's crunch this up. So we're still contained within parallel lines. The 692 level on the daily chart has held. It's been tested at 685, 88 multiple times. It continues to hold, and it looks like it's trying to break lower. So from our view, there's no change to our analysis here. We're still looking lower. We're stuck on the top of the cloud here, and obviously that is pretty obvious as to where the support is coming from. We think that this is going to go ahead and roll on over though, and break out the bottom side of this cloud and this trend line and work lower. And that's why we're being very, very patient and we're waiting for the 692 level to give way. I really think it's got to get above that level in order for us to get excited. Now, if you look at what's happening in corn, you have exports that are pretty good. You have sales that are really poor, and you have this just situation where we're tight in the front, but we have plenty of supply coming. And so that does not bode well for higher prices. Now, the jobs report this morning came out, or the non-farm payrolls came out, I should say, and it was much, much more employment activity than the market was expecting, which has caused the dollar to rally and oil and other commodities to go ahead and sell off. But the grains have been really pretty steady so far today, including corn. But I think that that's just a matter of time before it goes ahead and rolls on over. So no change to our corn analysis. All right, now let's take a look at new crop soybeans, holding the bottom of our cloud, holding below all of this resistance level. No change here. Remember, we have an absolutely massive crop coming from South America. And even if you take huge drought stress and apply it to Argentina, we still have about 1 billion bushels more this year than we had last year because that Brazilian crop is just so overwhelmingly big. And if you assume normal weather for us, then we are going to have plenty of soybeans, and lower we go. So we're continuing to look lower. I see no reason to change that analysis. What's been difficult about beans is this old crop chart, right? I mean, we are just holding in the top end of this range, and we just will not give it up, even though we keep trying to give it up down here, right? If we draw a line at 15 at today's low, or yesterday's low, sorry, the low of this green bar, really that is the support line. It's also the very bottom side of this gap where this big move lower started from. So if we were to snap a horizontal line just at this level and you look at where we're finding support, this is exactly where we want to see it trade below. I'd like to see it close below here yet today, but I just don't see any reason to change our mind because I know that it's tight on the front side, but I still think that March and May are going to come under pressure once that Brazilian harvest comes up, or at least the window for it comes up and is clear to go. And I think this thing just drops like a rock with the size of that capacity coming. So to me, it's when, not if, this ends up happening. So let's talk for a minute about what we're going to do if we do blow higher, right? For some reason, China comes in and says, oh my gosh, the delay in South America is too much, and we're just going to buy you completely out of soybeans. Well, then we're going to probably buy some calls, and we're going to hold those calls until we have a reason not to. And if it moves too fast and we can't get it, then we're going to sell calls up above it in order to capture some of it, and probably put more shorts on because until something changes our mind that crop in South America is smaller than what we think it is, and then we just want to look for higher prices to sell. So if you're short these, then up above these highs, you want to get on a call. You want to hold those calls until it's time to sell them, and then you're still short. So you just want to minimize the damage between here and there. But I think it's worth it to keep playing the short side because of the potential that's coming down the road, and that's exactly what new crop is telling us anyway. So now let me jump back to corn here. I'm sorry to jump back and forth, but I forgot to go through new crop corn. This is really the same as new crop beans. You know, we're looking lower. It's not nearly as strong as old crop corn is. You know, old crop is trading up here at this equivalent level, and this is another reason why we think this thing's going to roll on over. Okay, now back to beans. Old crop beans, no change. Here's what's going on with these and why it's so crazy and so hard to sell them. You know, this is soybean meal, right? We've gone from $400 a ton back in November all the way up to 500 here today. And I wouldn't be surprised to see us clear 500 and get up to the 510 level. And that could be what pushes beans on up higher. Again, this is yet another divergence. And the more these things tend to diverge, the more powerful the decline typically comes on the backside of it. So that's why we are not really interested in getting long these markets. And remember, there's not very many people that know why this is happening. Somebody's caught short soy meal, and they're getting squeezed. I don't think we know who that is, and I don't think we know what the reasons are for that. I just think we understand that the way this ends is very poorly, and it probably ends poorly on this chart here, because notice beans have not gone with meal as they've made new highs. So you've got this intra-market divergence happening between the products and the feed source, and that usually will not end well either. Soybean oil breaking lower, right? So oil is getting crushed, meal is breaking higher, and beans are stuck kind of in the middle, right near the top of their range. Okay, with oil, here's crude oil. It's also getting crushed today. You know, it has had a brutal week. Today it's got a $5 reversal, and that's partly being driven by the jobs number and the fear that that the Fed's going to have to be more hawkish or more you know, they're going to have to raise rates more and slow the economy down more. And so oil is getting hammered. Oil's worried about China. We're worried about the U.S. We're worried about global demand. We have lots of stocks, lots of production, and that story is not getting any better. So if this does start to break, you know, we need to be careful. Now, this is making me even more bearish. Let me zoom this out here, and I know this is you got to squint to see this, okay? But this is the area in which we were trading at the end of 2021, and if you notice, we are on a collision path right back to it. So if this area holds, and let's call it 71, 50, $72 a barrel, for sure down here at 70. If this level doesn't hold this market up, then I think crude oil has got a shot to get down below 60, and I don't think that bodes well for ethanol at all. So if you want to go apples to apples, you know, look at where old crop corn is at in relation to the same time period and same valuations as crude oil. You know, this is the end of 21, and that's all the way down here at call it 580 a bushel, or $1 lower than where we are. So oil is already right down here in this area, and corn has been resilient and held up because of tight supply. You know, I think that what we could end up seeing is just a steady action, boom, 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 just like oil's doing. And if beans roll over, then both corn and oil could look the same with much steeper lines. You know, it's going to look something like that potentially. So that's why we're holding firm and saying we've got to stay short these markets. We cannot let them get away from us, because once they break, it's going to be too hard to catch. So I'd much rather be wrong today and in the move when and if it happens, and I'd be much rather be wrong holding 692 than out as we break 6, you know, all the way down here. I'd much rather have that conversation than the opposite. So that's why we're being so patient. All right, now let's look at wheat. Apologize for always putting wheat last, guys. It's not really intentional. It's just kind of habit for me. But if we look at wheat, you know, this is the 6 or the 895 level that has been holding. You know, it really stems from the September low right here, and it's just been nice firm resistance. You know, this morning it worked like a charm. I had spec orders in to sell it this morning, and I missed it by a quarter tick. I was just being a little bit, I don't know if that's greedy or conservative, but my tick was a little too high, so missed this reversal here this morning, even though we had the order in. And so what we're going to do is just wait for the close, and then next week we may end up selling it, and we'll see kind of how corn and beans end up closing. But I think that what is the most likely thing to happen here in wheat is that it's going to roll over, and we're going to attack these lows, and we're going to move right on down to that 750 level. And here's another reason why I think that. Here is your cloud on wheat. This divergence has worked. It's worked up in three ways. You've got this reversal. Today is what you would call a 3 inside down, where this bar, the full body of this candle, stayed inside the full body of this candle, and today we've taken out the bottom of it. It's also a bearish engulfing shadow, and if we have more weakness next week, then you're going to have 3 black crows, which is a bearish, a long-term bearish reversal pattern that could really accelerate to the downside. So we're bearish these markets. I don't see any reason to change our mind on that, and I cannot reiterate enough that we've got to be hedged. We would much rather lose money on a hedge here than just let our farm's financial profitability fall apart without taking action. That's why we're hammering this so hard into these little rallies. The world is coming on a time where supply is plentiful, demand is questionable, but supply is more than adequate to take even an optimistic demand number. That's what our balance sheets are telling us, both in corn and in beans and in wheat, that yes, we can generate, yes, we're tight today. No, we're not going to be tight 6 months from now. And so at some point, these things are going to break, they are going to break lower, and we need to be early in that sales process, not late. If we break higher and something changes, hey, I love to be long grains. We're not going to have any trouble mentally switching and calling and jumping on board that. But I don't think that that's in the cards for us in the next 6 months at least. So lower we look, and I don't see any reason to change that. If you have questions, please give us a call. Obviously, there's risk trading futures and options, and anytime you're trading these things, make sure you're doing it in light of your own financial condition and working with someone that can help you create positions and manage them as they go. But with that, I hope you guys have a great weekend. We will be back with you next week, and we'll see where we are Monday, Tuesday, and we'll make videos as frequently as we need to based on price action. We'll talk to you later. Have a great night.